Hello and welcome to today's coffee chat. My name is Bobby Toulis. I'm from GFS, the e-commerce industry's largest provider of multi-carrier parcel services. And I'm very happy to be joined here today by Richard Lim, CEO Retail Economics.
Thank
Thank you,
you.
Richard.
Delighted to be here.
Yeah, now I consider you royalty when it comes to, your commentary about the retail industry and your influencing
Thank you.
across the retail industry. Now, we're going to be talking today about peak 2023, so the golden quarter of retail sales, as they say.
Yeah,
So we'll look back at that and deconstruct it, talk about what happened, and then we'll look forward to what the outlook is for 2024.
Yep.
And there's a lot of speculation around how this year is going to be, following on from a pretty tough year in 2023.
absolutely.
What the outlook is for retail and specifically for e-commerce.
Yeah.
And then we'll look even further out and actually have a chat about what we see as the mega trends that are going to be hitting e-commerce over the next 4 years.
Absolutely. Can't wait.
Ready? So Richard,
Mm.
peak 2023. Okay.
Yeah.
What happened? Did consumers go out and spend? How did retailers hit their forecast? What did you
Yeah.
see from sort of the macro economy kind of
Sure. I mean, I think in reality it's a bit of a mixed bag. So there are some retailers, there's always winners and losers. And
Yeah.
so there are some retailers that perform well and others that found the environment a bit more challenging. I think from a macro perspective, though, the overall industry did struggle and it was challenging. So we estimate that growth was around about 2.5%, but a lot of that growth continues to be driven by inflation. So when you start taking into account inflation, actually volumes were down on where they were last year. And then if you start peeling back the layers and seeing how the individual categories performed, food performed pretty well.
As
Always, people
we
wanted
want
to.
our food.
We want our food, and consumers wanted to make Christmas special, and so we've had even since the pandemic, there's been a few difficult Christmases, and so this was kind of only the second one really since the pandemic, and so food performed pretty well. Outside of food, health and beauty was another category that performed pretty well, and clothing relatively well. We saw positive growth, but again, being driven by inflation. Outside of those three core areas, though, I think it was quite a challenging environment.
Yeah.
In terms of then some of the winners and losers from a category perspective, and looking at some of the different channels, online, broadly speaking, in terms of the proportion of online sales, stayed where it was this time last year, so about 28-30% as a proportion of sales. I think the other thing to pick out was that value continued to be the key driver for lots of consumers.
That's logical, isn't it, in this day? Yeah.
Absolutely. So budgets were still under pressure, and so value was a core driver. And if you look at some of the performance of the individual retailers themselves, and some of the larger luxury brands like the Burberrys and Mulberrys, Watches of Switzerland, there are a few luxury players that have come out for their Christmas trading statements that didn't look as positive.
I heard that too. I think Next did phenomenally well, didn't they? In sort of in clothing, Zara. If you look at international brands as well, Dissecting, I think they did really well.
Yeah.
Marks and Spencer's, obviously, with the Christmas adverts and food. What is there not to love about that? Yeah.
And I think it's interesting though, because looking at those retailers, I think you also, as well as that shift towards value and some of the what's happening within channels, I think what we've also seen is a bit of a gulf that's emerging between the retailers that really understand digital and have invested in a sophisticated digital proposition that's really leveraging the data that they know about their customers, compared to those that aren't so sophisticated in digital. So I think we've seen a bit of a polarization in performance for those reasons as well.
I think definitely. I think that's definitely true, especially if, as research shows us, that consumers now, because they're looking for value for money, they're spending so much more time researching, shopping around. So if you're not up to scratch with your, PPC ads and your, SEO and all of those elements that make it easier for consumers to find your website and come to your website, then, it's a bit of a non-starter, isn't it?
Absolutely. Yeah. And so that kind of having a real seamless omni-channel proposition. Now, omni-channel, of course, is a bit of a buzzword, but this is how consumers, this is how consumer behaviour has evolved.
Yeah.
Consumers just bouncing between digital and physical channels, and they just want that proposition from the retailers.
I think from an operational view, it was probably peak 2023. It was probably one of the smoothest peaks we've had, especially if we compare it with 2022, when all the networks were disrupted by Royal Mail strikes, and suddenly there were parcels and thousands and thousands of parcels that should have gone with Royal Mail suddenly were in limbo and had to find other capacity with other carriers to try and get delivered. From an operational standpoint, I think the industry did really well this year in terms of, when we think of our customers, how well they prepared in having robust forecasts, but also with every peak, the golden rule is you need to have robust forecasts so you know exactly what you're going to need in terms of capacity, make sure your capacity is there. But also the flip side of that is have your contingency plans to mitigate risk. The what if this happens, what if that happens, and there's always a what if. So that went really well. And of course, on the other side, you've got the carriers who were, gearing up for the capacity that they could see coming from capacity requirements coming from the forecast. So it was a really smooth peak. Not that I want to jinx it for this year, but it was good.
Yeah, that's interesting.
So Richard, that was a really good sort of big picture view in terms of what we saw happen across peak in terms of sales, category performance, also from the operational side.
Yeah.
What about shopper behaviour? So, there's obviously everybody's been hit with the cost of living crisis, etc. So what do we see people doing differently, or consumers doing differently this peak?
Yeah. So I think, value, of course, has played one of those key roles. And because budgets have been under so much pressure, we've also seen consumers bringing forward their Christmas purchases and trying to spread out the cost of Christmas over a longer period of time. So we actually saw consumers even bringing forward Christmas spending into October, pulling forwards, taking advantage of Black Friday, taking advantage of those discounts, and just putting value, at the heart of that. So actually, the distribution of sales in the run-up to Christmas,
it's
almost like a twin peak. But actually, the peak around Black Friday has got even kind of more pronounced than in previous years. Probably, where we were last year, but there's definitely a kind of really pronounced peak around Black Friday now. Less of a peak as you actually get into the kind of the final weeks of Christmas, in December. But people generally kind of like spreading out their spending much more. I think the other thing that we've seen as well is probably that shift back to store. There's been quite an interesting dynamic for consumers. I think if you cast our mind back to the pandemic, I think lots of commentators were talking about how much of that kind of shift towards online would be permanent. Would there be a 5-year acceleration in online sales, a 2-year, 3-year? And actually, now we've got the data to look back, it's pretty much on trends.
It's gone back to the same trajectory sort of pre-pandemic in terms of forecast growth, but still sort of
still growing.
Still growing.
So the online market is still sizably larger than it was in 2019, but probably rebased a little bit faster than many had expected. I think part of the reason for that and feeding into kind of the Christmas trends has just been, again, the cost of living crisis. And so consumers have been avoiding kind of like, in some cases, all unnecessary costs. So they don't want to have to pay for delivery in some cases, or they just don't have the cash flow to be able to buy something online and perhaps have to return it and wait for their refunds. So budgets have been so tight, they've been maybe shopping online, but then want to use click and collect. or they've
Yes.
been,
Yeah.
looking in store to make sure that what they want to buy and then
Get the
ordering it
best
online.
price. Yeah, more
Yeah,
considered purchase.
absolutely.
Yeah. They're
So
going to be spending their valuable money.
yeah, so
Yeah.
just a lot more of that kind of omni-channel behaviour.
Mm,
I
mm.
think that we saw this Christmas.
Yeah. I think you're right about there being a pattern over peak, and we saw the same pattern. So I've got a graph here. So if I look at what the pattern looks like from a parcel volume perspective
Mm.
across our retailers, the ones that we manage delivery for, um, similar pattern to the previous years. If I compare 2022 with 2023, we saw that sort of peak in, that first peak around Black Friday, a bit later,
Yeah,
because last year retailers went really early with their Black Friday campaigns. They actually started sort of like third week in October. This year they started a bit later.
yeah,
So we saw that first peak around week 47,
interesting.
which
Yeah,
is around the 21st, 22nd of November. And of course, and then it carried on sort of like going up. Then it flattened down as we went into the first week of December.
hmm,
And then by the second week of December, there was another peak. It's that pre-Christmas peak.
yeah,
And the following week as well, a big peak. And I think that was probably driven by, obviously, there's always the last minute purchasing,
hmm.
right? Last minute gifts that you forgot to buy. So we always see that second peak around that.
That would be me
Yeah,
in
that's
your
me.
data.
But also, I think that's people got paid a bit earlier in December. So I think that's when suddenly they had a bit more money to spend and went back out. But after that, as you said,
Yeah.
it then sort of like flattened
Yeah,
flattened out all the way through December. But yeah, we did see a big jump in volumes in that compared to the previous year, but it sort of was pushed out a bit more.
Yeah. So from your perspective, then, do you think retailers that delayed their Black Friday sales and promotions compared to the previous year? Was that kind of like pushed it back into kind of later in November? Because I seem to remember in 2022, some retailers were doing Black Friday in October, the end
They
of
were.
October.
They absolutely were. But all that did, I think what they've realised is under the current economic climate, all that does is pull spend forward.
Mm.
It doesn't necessarily mean that it's going to continue that way.
Yeah.
Consumers still don't have more than what they're going to spend. So they just spend it earlier because they're being incentivized to spend it earlier.
So those kind of early sales come at the detriment of sales that were likely.
Yeah, I think that was the big learning in terms of behaviours from last year. We've seen it again this year. So this year they've gone slightly later.
Mhm.
So most of them sort of started beginning of November.
Yeah.
And then we saw, then there was the second spike. It's certainly in terms of parcel volumes was when they did the second round of discounting. So
Yeah.
later on in December, they were doing, deeper discounting.
Yeah.
People got their salaries. So I think that's what sort of drove that second spike, last minute purchasing.
Yeah. Yeah. And I think that's probably similar to last year. And also retailers will go on promotion, go on sale during Black Friday. And then there's a kind of like awkward moment between Black Friday and Christmas. And it's like, do they come off of discount or do they keep the discounts running? How do they tinker with those mechanisms to try to make sure that they have
Absolutely. And certainly from a retailer perspective, what we saw was that 2022 was a very tough year.
Yeah.
Right, so 2022 in terms of retail sales was really tough. And coming off the back of pandemics, forecasts were far more aggressive and ambitious.
Mhm.
So a lot of retailers got caught out with excess stock because they'd forecasted more sales than they actually had.
Yeah.
So this year, what we saw was far more conservative forecasts. Pretty much what they expected to happen is what happened. So it was quite non-eventful, really, as peaks go.
Yeah.
Richard, we've just deconstructed peak, dissected it. Now, what about 2024? What do you see as the outlook for retailers and e-commerce?
Yeah, I think 2024, I still think is going to be a challenging year. But I do think it's probably likely to be a bit of a year of two halves. And we're probably likely to see polarization as well. And so what I mean by the two halves part is that we've still got inflation that's running above target. It is falling sharply, but we're still going to be above target for at least in the first half of the year. That's what at least the Bank of England's latest expectations are. So lots of households are still going to feel the pinch. And that's not, and in terms of a recovery in spending power, we're not really going to see much of that develop until the latter half of 2024. But where we are really in terms of the cost of living crisis, it's almost like we're at the second act of the cost of living crisis.
Yeah.
So the first act of the cost of living crisis was where inflation peaked at 11.1%.
Crazy, yeah.
Food inflation, transport, energy costs. These were the primary drivers of inflation, and they make up a disproportionate amount of expenditure for the least affluent. And so we had inflation, cost of living crisis, and that really squeezed the lower income households. During that time as well, lots of households, but in particular middle to higher income households, had accumulated a lot of savings throughout the pandemic.
Yes.
So they had the cancelled holidays, they were commuting less socialising, and so there was a lot of savings. But all of those kind of like post-pandemic imbalances have now normalised. People have got through those savings as we're entering 2024.
So people have been using their savings to sort of offset some of the costs.
Exactly.
Yeah,
so it's been, that enormous amount of savings. The Bank of England actually estimated the households had accumulated an additional about £250 billion worth of savings.
Gosh.
And that was a huge cushion for the cost of living crisis for, in particular, middle and higher income households.
I do remember in the media, some of the media headlines talking about how people were drawing cash out, drawing savings, drawing cash over Christmas. So again, eating into those savings. Yeah.
Eating those savings and when using cash as an effective way of managing their budget as well. They take out £100 and that's their kind of budget for the week. But as we kind of move into 2024, we're going to see a much wider array of households being captured by rising interest rates. So lots of people coming off of fixed rate mortgages, having to renew.
That's going to be a shock.
It's going to be a shock, typically kind of like 2% going up to northwards of 5%. Yeah. If you look at the 28 million households in the UK, about a third don't have mortgages at all. A third have mortgages, and about 20% are in private rented accommodation.
Right.
So that 30% that have mortgages and the 20% in rented accommodation are going to be the ones that kind of feel the hardest pinch. Yeah. So we've got that to work through, and there's going to be a kind of a lagged impact, but those households that are going to renew their mortgages will feel that.
So what does that mean for retailers, specifically online retailers?
So it's like I say, the impact is going to be quite uneven across different parts of the sector. And so we've already seen some luxury players, for example, report that they've had quite a difficult Christmas.
Surprisingly, yeah. But I think that's also aspirational buyers. So maybe it's not their core customer. It's those customers that wouldn't normally buy that luxury brand but want to treat themselves for Christmas.
I think you're definitely on something there. And if you look at the data in terms of who are going to be the group of people impacted the most from what's going on in terms of mortgages, it's going to be the aspirational millennials.
Yeah.
This is the group of consumers that are typically more indebted than others, taking out large mortgages when interest rates were pretty much near zero. They've got PCP on cars. They're really quite stretched. And so it's this kind of group of consumers that are actually going to feel kind of like the hardest pinch. And then if you map that back to who are their which retailers do they shop at and who are their core customers, you can kind of start to piece together that picture of who might be.
But people are still good. Are you saying then that one of the key drivers for buying is going to be that value for money? Are consumers still in the main going to be looking for value for money? And what does that mean for retailers then?
So I think value is going to be a consistent driver throughout 2024, like it was last year. So people will continue to trade down. People will continue to look for cheaper brands, cheaper retailers, cheaper supermarkets in the case of food, but really put value at the heart of their decision making. I don't think we'll see that go away in 2020.
But that also means that maybe retailers that normally are sort of at the higher end of the, are not cheap and cheerful, also maybe need to realign their, have a value range so that they can, not miss out on that purchasing.
Yeah, exactly. So the part of the market that's going to be really squeezed is that middle market. So that mid-tier, whether it's kind of like apparel, but mid-tier apparel retailers, I think, that's
doesn't
one of
have a
the
lot of
areas.
differentiation.
Yeah. And so when it comes to communicating the brand proposition, communicating with their customers, and actually just being able to shift their proposition towards something that's a bit more value-led, that's going to be, really, really important.
Yeah. Okay. So, my theory is that brand loyalty, we've seen brand loyalty sort of become eroded over the years, but I think this is an even bigger accelerator of that, where unless you are a luxury or niche brand, loyalty is going to come down to where customers have got the best experience of shopping and also where they can get that value for money.
Yeah. No, absolutely. And again, and we're talking about the kind of the proposition for online, and making sure that you're just catering for the the diverse array of options that consumers now want. So whether that's in terms of in the e-commerce world, whether that's in terms of delivery options, being able to do things like click and collect, or pick things up from a locker, get things delivered at home, on time delivery, next day delivery, same day delivery, all of those delivery options become really, really important when it comes to e-commerce.
Well, obviously you're preaching to the converted because that's all we exist for, is providing a wide range of delivery options. But we also know that there is a real cost justification for doing that. That over the last 5 years, we've seen retailers get a lot smarter in terms of improving that whole online journey. But the focus has mainly been around the journey from the time they come to the website, how they browse for products, how they get. But then we still see that there's still work to be done when it gets to the checkout.
Yeah.
And when they get to the checkout, expectations from consumers are the same in terms of wanting to see a wide choice of delivery options or even payment options. They expect that choice. But we also know that if retailers fail to meet those expectations, that comes at the cost of cart abandonment.
Absolutely. Yeah.
Which,
yeah, exactly. So, the research that we did together last year showed that basket abandonment costing the industry 1 in 3 attempted transactions get left abandoned, costing about £31.5 billion
which is phenomenal
to the industry every year. So there's a huge cost for retailers who don't get it right, and especially at the moment with this kind of plethora of rising operating costs as well, input costs, operating costs, whether that's through kind of logistics or labor costs, other central costs, just the cost of acquisition of customers as well. Margins are under enormous pressure. And so when it comes to being able to secure those sales at the point of
prevent cart abandonment,
prevent cart abandonment, retailers can ill afford to let those sales slip through their fingers.
But fairness to retailers, what we see from 20 years now in the industry, just focusing on delivery and returns, is that retailers understand this. So you speak to logistics people within our large retailer customer base, and they understand. It's not that they don't desire to offer more options. I think what stops them or prevents them from doing that is the internal challenges around, if they want to expand delivery options, that means onboarding new carriers and new services, new IT integrations, more relationships to manage. And of course, that's if you take the traditional route of doing that. That's not scalable, which is probably why we're seeing a much bigger shift now, and a realization that there is a non-traditional route which you can take, which is rather than work with multiple carriers, is actually work with a single multi-carrier partner.
Mm-hmm.
So you do have access to that breadth of services, whether that's sustainable, whether that's next day click and collect parcel.
Mm-hmm. And that's presumably driving efficiency, driving productivity.
Yeah,
you can still leverage the scale and
absolutely. It's scalable, it's flexible, but also it's that one-time IT integration, that one contract to manage. That really simplifies the whole operational picture, if you like, which is a big thing.
Yeah. And then it feeds into that, kind of like urgency for retailers to continue their plans with digital transformation and become kind of more flexible, agile, looking at working with partners to try to really
absolutely. And I think that there also has to be an understanding that from the consumer perspective, the digital journey is one complete loop. Mm-hmm. They come onto the website, they purchase, it's the offline, the parcel, the delivery experience from checkout to doorstep, but then it's the returns experience as well. Yeah. So retailers need to understand that when consumers come to purchase, they're going to be, as the research showed, they're going to be checking what delivery options are being offered, what's the returns policy before they make that purchase. Yep. So it really does need to be approached as one seamless loop journey.
And having that information upfront in the customer journey as well. I remember that being one of the key aspects that even like before purchase, that pre-purchase part of the journey, customers still want to understand information around cost of delivery,
returns policy, but in most cases it's at the bottom, it's in the footer at the bottom of the homepage. And the research showed that as a benchmark, consumers expect, what we call the rule of 5, 5 delivery options. So if you at least offer 5 delivery options in the checkout, different types, you've got a good chance of being able to satisfy their expectations. They'll find something that's suitable. But again, the research showed the majority of online only were offering 2 delivery options at best. It just shows how far off the mark the industry still is, especially if you consider that we did the research last year and you calculated the cost in terms of abandoned sales at 31 billion. Barclays did similar research 5 years earlier and it was at 18 billion. Mm-hmm. So in the course of those 5 years, that gap hasn't closed. It's just got bigger, hasn't it?
Yep, absolutely. It has got bigger. And with that kind of bigger size of basket abandonment, I think it's just consumers' expectations are higher than ever before.
And that will continue.
Yeah.
So join us next week for the next part, which is the outlook for 2024.